Yo, what's up? This is a comprehensive breakdown of what inflation is and how it affects the economy. Inflation is the rate at which the general level of prices for goods and services rises, eroding purchasing power over time. While moderate inflation is a normal feature of growing economies, its effects can vary widely depending on the rate, causes, and how it's managed. Here's a comprehensive breakdown of the effects of inflation across different sectors and groups. Number one, the negative effects for consumers. Decrease purchasing power as prices rise. Each unit of currency buys fewer goods and services. Erosion of savings. Money saved loses value over time if the interest rate on savings is lower than the inflation rate. Uncertainty. Higher or unpredictable inflation makes it difficult to plan for future expenses. The positive effects for consumers. Encouragement to spend or invest. Mild inflation may encourage consumers to buy now rather than later, boosting economic activity. Number two, the negative effects for businesses. Rising costs, input costs, like raw materials, wages increase, potentially squeezing profit margins. Uncertainty in planning. Difficult to predict future costs and prices, which complicates long-term planning and contracts. Menu costs. The cost of constantly changing prices, especially for retailers. Here go the positive effects for businesses. Revenue growth. If companies can increase prices, revenues may rise faster than costs. Debt relief. Firms with existing fixed rate debt benefit from repaying with less valuable money. Number three, the negative effects for workers. Real wage erosion and wages don't keep pace with inflation. Workers experience a decrease in real income. Cost of living pressures. Rising costs, especially for essentials like food, housing, and transportation, hit lower income earners hardest. The positive effects for workers. Wage negotiation leverage. In tight labor markets, inflation can push wages higher. Here are the negative effects for savers and investors. Negative effects, real value or savings falls. If inflation outpaces returns, the real value of savings decrease. Interest rate mismatches. Fixed income investments may yield less than inflation, leading to real losses. These are the positive effects for savers and investors. Boost to real assets. Investments in real estate, commodities, or stocks may outpace inflation. Debt holders benefit. Inflation reduces the real value of fixed interest debt payments.